Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all on this Tuesday and trading day, of course. I'll be introducing Rob here in just a few moments, but as always, we have to cover our disclosure disclaimer agreement for all of our live webinars and events. Essentially, the main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. That's the main thing to take away. Other than that, the market continues to digest the Fed's commitment to interest rate cuts. It does appear that the market may have some rotation going on, so interested to hear what Rob has to say about that. Of course, very excited to interact with you all. So at this moment in time, I'll introduce the man of the hour who we're all here for, and that's Mr. Rob Roy.
Hey, Zach. Hey, everyone. Welcome to this week's edition of TradeFinder Live. Hopefully everybody's had a great trading day so far, and we'll get to what's going on in the markets. Just a little bit of commentary on what Chairman Powell said on Friday. Seems that the market is pretty happy with what he said. We didn't have any sort of a significant move lower. I think pretty much what he said was baked into the cake. They were expecting September rate cuts. He gave them that. Had he been a little more hawkish, I think we would have seen more of a downward move. We still have this gap right there, potentially to fill, which will get filled likely. As you know, we have the AI data to show 94% of gaps get filled. It's not 100%, but most of them do. The question just becomes when the gaps are going to get filled. Sometimes immediately, sometimes it takes some time. The issue with that gap, which makes it noteworthy, I think, is that it also happens to coincide with a little bit of an area of support right there just above the 540 level. You can see the consolidation towards the end of June that occurred there, a little bit of consolidation again towards the end of July. Then we had that Black Monday, whatever you want to call it, with the yen carry trade, and we've pretty much rallied up towards resistance since then. So now we're at a point where are we able to take out that high from the middle of July, the wave 5 high? And if we are able to take it out, what happens from there? Does this 5 move over and hit that level? I'm going to jump around just a little bit here, then we'll come back and talk about the Fed. But Zach had mentioned some potential market rotation. So take a look at this chart of the S&P. Then I'm going to jump quickly over here to the Dow, and then we'll come back and note the difference here in the charts where the DIA has a wave 3 breaking out of this triangle and moving to the upside. We are going into a little bit of consolidation here following the breakout. As long as we stay above this 410 level on the DIA, I think that may be where the action is. So you can view that, I think, as a little bit of caution. I've been spouting this for quite a while, that you trade what the market gives you. The market's been moving to the upside, so that's what we trade, but not back the truck up, load the boat, whatever. It's just the point of trade what the market gives you, but keep in mind that things aren't great and rosy in all aspects of the market. And when we see the Dow outperforming the S&P, makes you think that money is rotating into some more defensive sectors. We're going to talk a little bit more about that a little bit later on when we start to move towards our case study consideration. But the DIA may very well be our case study consideration for today. But getting back to the markets, you can see even with this breakout, we're a little bit overbought on the DIA, so it's quiet today so far, and that's to be expected. And if we can hold this 410 level, allow that 10-day moving average to catch up, then perhaps we continue higher in the Dow. Going back to the S&P, we have to wait and see. If we take out this wave 5 high, does it match the DIA? Does that turn into a 3? In other words, a relabeling? Or does the 5 move over? We take a look at the DMI to give an indication of strength, and still, even with this move off of that Monday morning low, the ADX has just really not been impressed by this move at all. And there's enough data there. I've talked a lot about how within the DMI, the two directional indicators, the green and red lines, are very dynamic, I guess, with the market. They move with the day-to-day movements of the markets. but the ADX is a little bit more of a lagging indicator. But by now, it should have turned back to the upside if there was indeed some significant strength to this move. So we have to be careful of that. Then we go back to the Dow and we look at the DMI there, and once again, a different picture. Note the difference where the ADX is trending to the upside here, so showing there is some strength to this move and breakout of the triangle, separation between the two directional indicators. So that is more of a solid DMI, indicating once again that the Dow, at least right now, is outperforming the S&P. We just need to know, once again, if we can hold this 410 level, if we test that break above resistance from middle and into July when we were up above 410. Again, we got turned back each of those two times. This time it appears that we're going to hold above 410, and we'll see if we can continue that trend to the upside. So, yeah, Zach, I do think there's a bit of market rotation going on. Not quite just fully defensive, but staying in the equity side of things, but maybe more of the tried and true with the Dow 30 large industrial companies rather than the high beta stuff that we've been used to moving for quite some time. So that's really the idea of perhaps some market rotation going on, but without a breakdown below this level here at 550, we can't even really talk about any sort of negativity with the S&P. We were a little above the 10-day moving average, so you could just argue that this is warranted consolidation here from this pretty vertical move higher. And as long as we stay above the 10-day moving average, we're okay on the S&P as well. Just feel like the Dow chart looks a little bit better than the S&P chart does at this point in time. Taking a look at rates, as you would probably imagine, rates moving to the downside with the Fed's comments. And just to restate what they said, they had come out with some commentary on the Thursday of the Jackson Hole meeting last Thursday, and said that, and they talk in code. If you've heard any of my recent recordings, you know I've been talking about this, where they don't give you the number of FOMC members that are voting for which or whatever, but they said some are voting for or would have voted for a July rate cut had it come up on the table. And then it said the vast majority are in support of a rate cut in September. So basically, Powell came out and reiterated that on Friday, stating that it's time for a change, for policy to change, and that is a rate cut indication. Notice that we are breaking below the 161.8% extension on this downward zigzag. So we've done everything that could occur in this zigzag pattern. So we should probably take it off and start to look at what's occurring here. And I think we could kind of broaden this triangle here a little bit and bring it down into this area. Maybe move that line a little bit there to make it a little bit more symmetrical. And it does look like we're trying to break to the downside out of that triangle following the 161.8% extension. And I've mentioned before that we don't want rates to go too low. And I know it sounds counterintuitive because we've always been talking about lower rates is good for the equities market, it's good for tech stocks, etc. But if we go too low, I think it starts to show that there is some weakening in the economy, and maybe the Fed needs to cut rates a little more aggressively than what they're showing. And all the economic data is backward looking. It has shown some weakness, but not that the economy is crashing yet. So it seems that the bond market is saying, yeah, maybe things might be a little bit worse than what the Fed is giving credit for, and maybe the Fed will need to be a little bit more aggressive. We don't have another meeting until September, so there's still a little bit of time before that September rate cut comes to fruition. And then we want to know what kind of data have we seen between now and then. 100 basis points had been talked about, cuts between now and the end of the year. But now all we really have for sure is the 25 basis point rate cut in September. That's at 100% on the Fed fund futures. So that part we're pretty certain of. After that, we don't really know what's going to happen. Could we get some surprisingly bad economic data between now and the September meeting and it moves back to 50%? Maybe. Could we see a 50% rate cut in November? We just don't know. And with the election coming up on the horizon, you've heard me say this for months now, I really don't think the Fed wants to do a whole lot before the election. I think they feel like they have to do that September rate cut now. I'm not sure they would have really wanted to do that. They would have preferred to wait till after the election to do anything, but they don't want to risk waiting too long, even though they may have already. And then if we look at the dollar, that's been pretty interesting as well. Look at the dollars just cratering to the downside here. Pretty vertical move down. We're at the 161.8% extension on the dollar. We're a little bit oversold now from the 10-day moving average. A little separation there between where we are on the dollar and that 10-day moving average. We don't want to see the dollar really collapse too much. We're already back down towards the 100 level. And I know that in the past we were down around 94, 96, and I was saying I don't want to see it go below that. Really rather not see it go below 100 at this point in time. If it starts to coincide with the U.S. economy is weakening, the Fed is behind the curve, and the U.S. economy may need some time to recover, we still need foreign countries buying the dollar to support the amount of debt that we have. And I'm not sure the U.S. government quite gets that yet, because with rates being down like this, they're like, okay, we can issue more debt because with rates getting lower, it doesn't cost as much to service the debt. And that's a concern that I have, but those are longer term issues. If we go and look at the VIX, we can see that we're back in that range, just kind of meandering around this level between 12.5 and 17.5, where we've been the majority of the year, save that big spike up that we got on that Monday morning. But that got corrected pretty quickly. What goes vertically up comes vertically back down. Exactly what happened with the VIX. And as long as we stay in this trading range here, we're really not getting much of a signal one way or the other on the VIX. I don't really see the VIX breaking below 12.5. Maybe we don't even come down and test it again like we were towards the end of the spring and early summer. But we want to watch and see if we break back above 17.5 and add some more volatility. I don't think that would be too surprising with the election on the horizon and a neck-and-neck election by most polls. We don't really know who's going to win, which party is going to win. We don't talk politics here. We just talk about how whatever party is in control, how their policies tend to affect the equities markets, and leave it at that. So not much direction from the VIX at this point in time. So I'm going to go back to the Dow real quick and just remind you that I think that's, at least for now, where the action is. But once again, just like with the S&P, we have that gap there that could get filled. So we have to be concerned about that. And then if we take a look at the Qs, which has been leading, you can see I drew this line from earlier broadcasts this week. Yesterday, we had the EWO Trader Live, which is for subscribers only at ewotrader.com. And we have set a bit of a lower high here on the Qs, and we have a qualified, although barely, still qualified. And remember, there's a difference between qualified and confirmed downward zigzag pattern, which would show the Qs potentially coming all the way back down to where that B wave was on the upper zigzag back in April. So there's a potential for that. We did trade below the 10-day moving average for a brief time today. We're back above it for now. The 50-day moving average is not too far away. We've got some lines there of potential support. So it wouldn't be, I don't think, a straight line down on the Qs. It would be kind of working its way down, bumping and grinding, if you will, on the way down from these support levels. There's another one down there at 450. But you have to wonder if, at least for now, we're over that trade. Now, we have NVIDIA earnings tomorrow, and who knows what happens. A pretty good report is already priced into NVIDIA, so they're going to need to really blow things away to move to the upside. I figured we'd get questions on NVIDIA with their earnings tomorrow. So just go ahead and bring up the chart. And unfortunately, if you're looking for a read on it, there just really isn't one right now. You can see that we are bumping up somewhere near the resistance areas of June and July. If we were able to break above that, call it 135 on NVIDIA on just a blowout earnings report, which is I think what it would take to break above that, then we can talk about NVIDIA being off and running again and be back in clean air. That analogy that I use from racing, like when you're out front, you have clean air coming into the radiator, but when you're in the middle of the pack, you got all the exhaust from other cars and the little rubber bits off the tires, etc., and the engine heats up, and it's tougher for the engine to perform at peak horsepower. But that's where we are. NVIDIA has got some traffic ahead, if you will, to stay with the analogy with those previous highs. But if we can break above it, then whole different story. If we are going to break to the downside on their earnings report, and like I said, they can have a solid earnings report and it still be disappointing. It's going to have to be blowout for it to move higher. But if it's decent, but the market's disappointed, we'll look to see if we can hold this level at 120. If we break below that, then we're probably coming down to 100. A number of people have been asking me how to trade this NVIDIA earnings report, and I think it's difficult to trade at this point in time. There's a 7.8% at last, that was a couple days ago, it may have changed by now, movement priced into the options on the expected move, and on average, NVIDIA moves 8% on earnings. So you can see the average movement's already priced in. So to be able to make money on a straddle or strangle, something along those lines on NVIDIA, you're going to need an outsized move. In other words, it would have to move more than on average or more than what's priced in. So you'd have to have a greater than 8% move. So you could have NVIDIA break out 7%, but on a straddle or strangle and lose money on it. It's got to move more than 8%. So we'll see what happens when they report their earnings tomorrow. For now, we're still holding above the 10-day moving average. But again, if it's disappointing, can it hold 120? If not, then we're likely to see 100 again. If it's really good, can it break above this resistance level at 135? So also, NVIDIA does tend to have a pretty good volatility crush following earnings. You go back and look at the options. I think the smartest, most prudent play on NVIDIA, which is not what everybody wants to hear, I understand that, but it's to wait, see what happens on earnings, and then make the trade afterwards, whether or not it's an upside or a downside trade. I think there's room either way. We break below 120, you got to trade down to 100. We break above 135, then who knows how high we can go, and you got to trade there. But I think that's the smartest thing to do. We do have a 5-wave qualified pattern here. I don't like it when the wave 4 is just one day, but we did get in the neighborhood there in the first week of August. But right here at the 50% corrective level, it shows that the expectation is for a move higher. We look at the ADX, though, it looks awfully similar to the S&P, doesn't it? I mean, that DMI is almost identical to the DMI on the S&P, where the ADX is just kind of meandering its way down, not really impressed by what move we had to the upside here off that wave 4 low. Buyers aren't really stepping in front of this earnings report with much strength. The sellers aren't either, though. So it's just kind of like everybody's waiting to see, following along with what I said was, I think, the most prudent thing to do is to see how the market reacts to what NVIDIA has to say tomorrow and then make a trade there. It just seems like that's what the majority of the market is doing based on that DMI. So Zach, I figured we'd get questions on NVIDIA, so I just thought I would head that off at the pass and go ahead and talk about that earlier. Back to the Qs. Obviously, whatever NVIDIA says is going to have a direct effect on whether or not we continue downward in this zigzag pattern, or if we can break above. It wouldn't take much of a move back above this B wave to disqualify the downward zigzag pattern, because we're so close to that 78.6% fib level, which is the last bastion of support or resistance, depending on the direction of a zigzag pattern. So all eyes are going to be on NVIDIA tomorrow. So that's about as much as we can say along those lines. Let's go over and look at crypto land. We did have a breakout here on Bitcoin, but now we're right back. And it seems like maybe we're going to, before a real significant move, maybe not, how the election plays out. We got that break to the upside, just under a 70% wave 4, so it's still a qualified downward zigzag. If the Democrats win, perhaps it puts a little pressure on Bitcoin and the crypto world. If the Republicans win, with all the chatter about cryptos, we could see a bid and get back above 65,000. But we had that this big move higher here. Some say that has to do with RFK throwing his support to Trump, and he's a fan of Bitcoin as well. But the election, by most polling, again, is just the toss of a coin. We really don't know who's going to win. You have to wonder, are we going to know on election night? Is it going to go to all of those extra counts and all the other stuff that goes on and has been? It's going to be a close election one way or the other. And we could make an argument that Bitcoin broke out, is testing the breakout, and tomorrow it turns and runs back up. There's three primary ways that you break out of triangles. Sometimes you just take off and run, whether it's more vertical or more 45-degree angle. You know how those the more vertical ones don't last as long. The 45-degree angle ones tend to last longer. Sometimes you break out, you come back and test the breakout and then run. So that's still a possibility that all we're doing is testing this breakout and we get a turnaround and Bitcoin takes off again. Or you have a false breakout where you get a move and it's a head fake and the big move is the other way. It's still possible, especially coming back down to test the point of the breakout. That was a pretty solid breakout bar that occurred here. So I'd be a little surprised if that was a false breakout move, but it could be. And there's a long time still now between now and the election. So it seems like we're going to have a move in Bitcoin one way or the other before the actual election results. But I think if you're a crypto follower, you're going to have to be really in tune with what's going on with the election and be careful there. I know the Democrats have seemed to warm a little bit towards cryptos, but you have to wonder if that's just fodder, just chatter to try to not create such an enemy of the crypto world for the potential Democrats on election day. But anyway, right now, there's no doubt that we are coming back to test the point of the breakout. We look at Ethereum, very similar going on here, although we have broken below the point of the breakout on Ethereum. We do have a little bit of support there at 2,500 going back. We broke it on that Monday, but it recovered quickly, and we got back above 2,500. We've consolidated there. We had the triangle, tried to break to the upside, clearly not nearly as strong of a breakout move as we had in Bitcoin. Now we're right back down here to 2,500 on Ethereum, and you just, again, wonder if this five-wave pattern is a foreteller. But I want to remind everybody that when you have these triangles, even in the words of Elliott himself, triangles trump everything else. There's a pun intended there. But you pay attention to what happens with the triangle more than you do the five-wave pattern. Elliott also believed that all of the corrective patterns, flat, zigzags, or triangles, had a higher percentage chance of reaching their targets than even the five-wave pattern does. A lot of people focus on the five-wave pattern because that's the general information on Elliott wave, but I would submit to you that Elliott wave is far more complex than just labeling 1, 2, 3, 4, and 5 and moving along those. There's a lot more behind the scenes that goes on, a lot of things that go on shorter term. At Evo Trader, we look at how we can use Elliott wave from a trader's approach rather than being the most exact on labeling every little single movement where you break it all the way down to microwaves. We don't do that. We just look for the bigger picture and how it plays into trading in general. Let's look at the metals. We've had a little bit of a bid in gold. We had a move to the upside here. We did have an alert on gold. We took it off on this first move here. We came back down. and now we seem to be looking again, and we're watching that. And I'll just tell you that if we break above this wave 5 high here from the middle of August, we'll look to go long gold again. But right now it's just consolidating under that wave 5 high. So we're going to wait and watch and see if we can break above that level. If we do, just like I was mentioning with NVIDIA, we could be off and running up here towards 250, which is where that wave 5 tap box is. So the wave 5 so far has only had a 44 or 45% extension. We could go a lot further on GLD, but let's wait. Let's let us see it break above 235 first. And then silver has been playing catch up. It's not been performing as well until recently, and it's moving to the upside nicely. So they tend not to separate for too long, gold and silver. They move not exactly in tandem. They don't have the exact same patterns, but they tend to move in similar fashion. And SLV has been underperforming. We've wondered if that has to do with the fact that there's so much silver in the technology sector, and technology has been undergoing a correction, perhaps. And once again here, still have a qualified 5-wave to the downside pattern. And of note is that SLV is right at the 61.8% fib level. Anytime I see anything at a 61.8% fib level, whether it's support or resistance, I pay attention. To me, it's the strongest of all fib levels, and oftentimes acts as a strong point of support or resistance. So can the SLV break above this level, pardon me, and disqualify this pattern? If it does, it's got a little bit of resistance not too far ahead, around 28. But if it can break that, then we're probably testing these highs from May in relatively short order. But we'll be watching this 61.8% level here and see if silver gets turned back from here or if it can break higher. One would think that if the Fed is going to cut rates and be somewhat aggressive in cutting rates, that would keep a bid under the metals. And so we'll see if this pattern becomes disqualified there. I don't know what would turn this back down with the current plan unless we started to see some much hotter inflationary data come in, which would make the Fed back off a little bit on cutting aggressively. That could turn the metals back down. That's really the only thing I see that could change the current upward momentum on the metals. So we'll keep an eye on those inflationary reports as they come in over the coming weeks. Then we take a look at UNG. As I said last week, we've nailed this one. We called this one pretty well. We didn't know where the wave 3 was going to go because there was no zigzag in it. When you have a zigzag in the wave 3, you do get a pretty good idea of where wave 3 is going to go. Most Elliott wave traders agree that wave 3 is the strongest of all waves. And I've always said, why ignore it? But the prevailing wisdom is it's hard to know where the wave 3 is going to end. And my argument is if there's a zigzag in it, you can tell where it's going to end. Without one, it is difficult to know where the wave 3 is going to end. So the commentary was, since this is a mono wave down, once this wave 3 does complete, we're likely going to come back and test 15 because that acted as support for quite some time in the spring. And then after testing 15, we've been turned back, and we're actually a little bit below the 10-day moving average now. Now, the algorithm that's pricing in the software, and if you haven't taken a look at the software, we're going to look at some of the AI results in a little bit. We now have, where the Hub organization has now released the AI to a select number of people in the founders group. If you haven't taken advantage of it, there's only a couple spots left at a founder special, which you're grandfathered in to get those AI signals. So go to hub.com and get a copy of it, whether or not you take advantage of the AI signals or not. This is a great software program, and you want to be involved with it in your trading. So the wave 4 here is still green, which means that the algorithm is not fully convinced yet that wave 4 is over. I can tell you that if UNG does take out this wave 3 low, that 4 will turn purple, and then will be confirmed in a wave 5 down. So even though we're moving down pretty well, the algorithm isn't 100% convinced. You've seen some other charts where the 4 was purple, and that's the green means that that wave could still be in play purple means that the algorithm feels that wave is complete. So if we break this wave 3, that'll change. The 4 will turn purple, and then we'll just wait to see where that extension could be. We only got a 30% bounce up in the wave 4. If that indeed is the end of it, that's not a huge bounce, but it did bring us back to resistance, which is where we thought we would go. I had somebody in our insiders meeting last Thursday night. I was telling you last week that I hadn't looked at the Farmer's Almanac yet to see what the forecast was for the winter time, and that I would have that for you this week, and I didn't have to do it. One of our subscribers did it for me and literally read it off or Zach read it for him during the insiders meeting on Thursday night, which is also a alert subscribers only meeting. And basically, it's a mixed bag. There's parts of the country that could see a pretty rough winter, but the majority of the country should see a fairly mild winter. And that seems to be what, at least for now, natural gas is focusing on with this movement to the downside. You would think that if we were going to have a really, or the forecast was for, nobody ever knows for sure, a brutal winter, then we would have at least a further wave 4 move, but that didn't happen. All right, so let's take a look at a couple international markets, then we'll look at our case studies. We'll take a look at EWA for the folks down under. I know we have a lot of viewers around the world. We have a lot of subscribers in different parts of the world, and Australia is resource rich, so when there's a bid underneath the metals, Australia tends to do well. And they are a little bit of a pullback, but you can see there was good separation from the 10-day moving average. So we needed to pull back a little bit here. And so far, so good. The first level to watch here, if you're trading down under, is 25 on the EWA. Can we hold that level? That was resistance back in the middle of July. We broke above it. We need to test that. If we can hold there and allow that 10-day moving average to catch up, then we could be off and running. I do think that Australia is going to move a lot with what happens with gold and silver, at least in the near term. Looking at Canada, for friends up north, the charts are pretty similar between the EWA and the EWC, which I find interesting. Canada is not viewed quite as resource rich as Australia, but yet these charts are awfully similar. And I know that some of our Canadian friends have talked about some of the resources that Canada has, but they certainly are trading in lockstep. The two charts are almost identical with separation from the 10-day moving average. Decent day today so far. In Canada, we use the EWG to give us a representation of what's going on over in the Eurozone, and we're right up against resistance also. Separation from the 10-day moving average. So if you're long the EWG, couple of notes of caution here. That's a pretty vertical move. We're right at resistance from that May wave 5 high, and there's separation with the 10-day moving average. I know when you see these vertical moves, you cheer them on. Not you particular, but in general, people cheer them on and want to see them go, especially when you're long. But the caution is, when you break a point of resistance and you're already overbought, it tends not to hold. So it can whipsaw on you and turn around and come back. If you're long the EWG, I think what you would prefer, what tends to work, is let's go sideways a bit now, consolidate underneath this resistance from the May high, let the 10-day moving average catch up, do some backing and filling here, maybe even a move back to 32, consolidate ourselves, and then break above that resistance point. I think that would have a greater chance of holding. You may know the Eurozone is a little bit ahead of us in rate cuts. And then last but not least, the INDA, which has just been on a track of its own lately. But see how we're at resistance here as well on the INDA. So very similar to what I just talked about with the EWG, except the separation from the 10-day moving average is not as great. But we are consolidating right here at this resistance area, and that's key. That's what you want. So we had the triangle, not a really well-formed one, but a triangle nonetheless, and we did break out to the upside. So we're going to test this area of resistance, and that wave 5 is what I'm looking at, already at 173%, 174% extension. So it's a pretty extended wave 5. If we are able to take out that wave 5 high, do we move over? Does it stay extended? If so, I think that would warrant some caution that maybe we're just kind of creeping up, maybe a little FOMO going on, and we run out of gas. Or if we take that out, does that 5 relabel to a 3? And then that's the place you want to be moving forward for the next couple of months, is in the INDA. So pretty interesting stuff going on there. If we take a look at our case study, the only one that we have is the one that we posted from last week, which is KEY. And we had a target of 18 to move higher there, and we got up above 17. Little bit of separation from the 10-day moving average there, as you can see right there from the green line, and we're back down testing that 10-day moving average. So we haven't quite hit our target yet, so we're just kind of staying the course on that one. If you're following that one, no need to exit that position at this point in time. It's just doing what it's supposed to do, which is correct an overbought condition. And as long as it holds here above the 10-day moving average, I think we still have that possibility of moving up to 18. You can see that that 3 is still green. So the algorithm thinks that this wave 3 is still underway. You'd probably want to take a look at the DMI when you see that. And it's still constructive. The ADX is kind of maybe rounding off a little bit. We do have a little bit of a movement down in the positive directional indicator. The thing that would be of concern here is we also have a little tick up in the negative directional indicator. I don't get concerned about the positive coming down as long as the negative is going down. That just means that the buyers have stepped away for a little bit, but that the sellers aren't really re-energizing. But here, with a little tick up, that's something to watch. But for now, there's still pretty good separation between those two. And with the ADX above 30 and still below the positive directional indicator, you would view that DMI as being constructive, at least for a potential continued move higher. So no reason to do anything with that one. That would be the only one, as I mentioned, that would be considered open. We are going to use, and I wanted to show you, I promised I'd show you the AI results. And that's what you can have access to if you go to hub.com and subscribe to it. You can see that we have a score there on VONV above 75, which is where we pay attention. And that is the Russell 1000 value. And yesterday there were a few different ETFs with the Russell 1000. The AI seems to like the Russell 1000 at this point in time, but more focused on the value side of things. So I think that kind of plays in with the DIA, and note that the DIA is on here as well. It's a little above a 70 score, so not quite as high, but that's going to be our case study consideration for this week. It's the DIA. Even though it's not quite at 75, you can see the Russell score is at 80, which is pretty high. The problem is when you start looking at these ETFs, if you're an options trader, there's just no liquidity there. In the options, the strikes are available, but they have zero open interest, which means you're trading against the market makers. And that doesn't mean you can't trade them. It just means that you're going to buy at the ask and sell at the bid. Very small likelihood that you're going to be able to get filled at any sort of a mid price, which is what we try to do whenever possible on an options trade. You want to try to avoid paying the ask and selling at the bid if you can, somewhere in the middle. If you have good open interest, you're likely to get filled. But with zero open interest, you're trading against the market makers. They're going to spread the position off immediately, and they're just not going to cut you any slack on the spread. So you pay the ask, sell the bid. We're a little bit above the 10-day moving average here, so it looks like a pretty good entry here. But once again, you look at the options and what do you trade? I'm not a fan of trading against the market makers, but you look at that DMI, and that looks awfully good. There is a tiny tick up here in the negative directional indicator, but other than that, it looks pretty solid. Yeah, we're getting a little bit of a down day today, and those two directional indicators are more sensitive to day-to-day movements. So a little bit of a move down, but not much on that. But if we go over here and look at the DIA, and this will give us our target price for the DIA, you can see it's up at 424. Note that the score is not in green, it's in gray because it's in a gray area. If we see 75 or above, and we can find a good options trade after the options analysis side of things, then we will go ahead and put that on. And oh, by the way, if you're interested in the options features on this software, I haven't shown you this much before, but they do have them here. And you'll be able to see it's in beta form now. So I'm just giving you a preview of the options that the options functionality that's going to be available for putting on trades. And they may be working on it. The programmers may be working on it this moment, but you see, you can pick strategies, and you can make it just calls or puts. You can go long, you can go long calls, you can go long puts, all kinds of different variations that you can utilize within the options functionality once it's available. So it's just in beta form now. I'm playing around with it and sending back information to the programmers, but at some point in time, this will be available for all of you. So just a really cool feature coming, along with a whole lot of other features that are coming with the software. But that's going to be our target, 424. I'll put the DMI back on there, which is pretty constructive for a move higher. I do think this kind of plays into the same general theme of rotation more towards value than high beta. So that's what the market is showing us right now. And it always helps to put volume on. And you can see with those up days, we had pretty decent volume. Other than that Monday where everything had a big red bar that morning, you can see that the green has outpaced the red most of the time. And you know, if you watch trading, that's pretty unusual. Normally the red bars, because when they're selling, there tends to be more volume than green. But that's not the case here. So it does show to me that there is market rotation from some of the bigger players into these slightly more conservative or slightly considered more value type plays. So that'll be our case study consideration for this week. But before we get to that, let's go ahead and take some questions, and then Zach will be up on in a few minutes and show you how to actually post that. That will be an idea, Zach, even though it's not quite a 75 score. I just think when you add in all of the intangibles with all of the scores that have been coming in very high on the Russell value, I think you could make an argument that this is a pretty good substitution for it, since there really aren't any great options available there. So happy to take a few questions if there are any at this point in time, Zach.
You know, we always have outstanding questions from our very informed knowledge or subscriber base here. And so we'll start out with a couple symbols from Manuel. First one is going to be LLY.
All right, good old Eli Lilly. Also been a pretty interesting place to be, Eli Lilly, because of the little bit more of a conservative nature there, healthcare sector. And you look at the chart and see that big move up. And the issue here with Lilly is that we're right at that wave 3. We technically took it out, but just ever so slightly. So you want to watch where we are here. This one, I think, if we break above this, if we can turn and go, we've traded above it 3 times, but not been able to close above that wave 3 high yet. So I think if we do, then you could make an argument that this is off and running, kind of around the 38.2% wave 4 correction fib level there. But it's just right at resistance, and you want to keep an eye on it. Now this is, if you wanted to see what I was talking about before, especially with the EWG, you get a little bit above the 10-day moving average, you get at resistance, you want this consolidation. This is what you want to see. Let's consolidate at a resistance level and then break above it. you have a little more momentum, a little more energy, and a more likelihood or a higher likelihood that the breakout move continues. You don't want to see it break out and get sucked in and then have it whipsaw and reverse on you. So at least for now, this looks very constructive to me, but I still wouldn't want to get it because it is resistance, and I wouldn't want to do anything long just yet. I would want to see a close above this level, more importantly, a close above this wave 3 high, and we start to see some follow through, then I think Lilly would be a good place to be. So I think that's one to keep really solidly on your watch list. The DMI looks pretty constructive as well. You note the difference here in the negative directional indicator where it's going down while the positive is going up and the ADX is moving up. So just right along with the theme, good on you, whoever asked the question, as far as kind of a rotation to, again, not defensive, but maybe more on the value side of things. So keep a close eye on that one. You may very well have a good trade here within the next couple of days, but let's let it do its thing and break above it first.
Agreed. And that was Manuel, who also has a symbol for TTD.
I haven't looked at that one in a while. Trade desk, and it's a little bit different scenario here as we broke above the 100 level, which is, kind of expected when you start to run up here. Back in springtime, you're getting above 80, 85. It's just like a magnet. I talk about the tractor beam effects from Star Trek as an analogy. It just draws it to 100, and then we went into that period of time at the end of July, and then that Black Monday where we had a quick correction, which, as it turns out, would have been a great buying opportunity here. And then we've moved up. Now, no wave 5 pattern here. So we just watch this from the break above the 100 level, touch the 10-day moving average on the low today. And at least at this point in time, while we're trading near the high of the day here. So this is another one that looks pretty good to move forward. This one's kind of a pretty easy read. I think you're long here. If we break back below 100 with a follow through day, then you would exit. So your stop's pretty close here. But I think for now, being long here seems to be the place to be. Keep an eye on that negative directional indicator ticking up, but that could just be just because of today's a little bit of a move back down. But yeah, I like that one above 100.
Very well. Next up, we have Will here. Can we look at MDY? Not quite as erratic as the small caps.
No, and that, there's some results also from the mid cap area from the AI. So it's taking a look at this as well. So good on you, Will. And we've got a pretty decent read here as well, because we had that wave 5 high back at the beginning of April. We tested it in May, came down a little bit, tried to break above it in July, got turned back, tried again at the end of July, and then all the craziness of that Black Monday, and now we're right back up there again. And we broke above it. And this is actually a good one to talk about from an instructional standpoint, because if you listen to these much, you hear me talk a lot about a follow-through or confirmation day. And we did close above that 560 level back on the 23rd on Friday. And then the next day we traded above it, but we closed below that high. So that doesn't count as a follow-through day. We would have needed a higher close here on Monday, yesterday, for that to count as follow-through. So we did break above it, but we haven't had that follow-through confirmation yet. So for now, we're watching, or you'd watch this 560 level. Can we hold here? And it was a tiny bit overbought on the open yesterday. Not significantly so, but a little bit. So we're back down testing it. If we hold here at 560 and can bounce back up and get some sort of follow through back to the upside here, and the 10-day moving average stays along with it, that could be an area as well. The mid caps, along with Russell, the whole theme here is market rotation. And you guys are asking great symbols. Zach, you mentioned we have a knowledgeable base here. I love doing these trade finders. You guys know what you're doing. You ask great questions. You're in the right sectors. It's a lot of fun to look at these kind of things. So, yeah, great. Absolutely great symbols so far. Let's keep going for a couple more.
Sounds like a plan. We're going to follow it up with another symbol from Will on WBA as a short, one of the ugliest charts I've seen in a while.
WDA?
B is in Bravo.
Oh, okay, yeah. Yeah, that's a whole different thing. Walgreens boots. Yeah, I've been actually doing some reading about them. You know that Walgreens just went on just a crazy expansion where they wanted a Walgreens on every street corner, it seemed like, and now they're closing stores that are underperforming, and they're struggling. You can see not a good day today. I would agree with you, Will. That's about as ugly of a chart as you can see. And then you have to wonder, how far down can it go? The issue here is the fact that this is heavily institutionally owned. They're not going to like that break below 10 today. So I would be a little nervous on shorting this. I know that was the question, because what tends to happen is when you own stocks with double digits, anything with growth in the investment objective, whether it's growth in income, etc., they can own stocks at $10 or above. Now, there's a time frame. I don't remember exactly what it was, what it is. I used to know, and they've changed it numerous times. But there's an amount of time that if you stay under 10, they have to sell, because now it's a single-digit stock, and they don't want to do that because, if they've been riding this all the way down and then they have to sell, that means they realize this loss. It goes from an unrealized loss to a realized loss. And what tends to happen is they tend to kind of come in and support it and try to get it back above 10 and get it back above 10 enough to create short covering, to where the shorts have to cover and you get a move back to the upside. And we have this big gap here at 15, which someday could get filled. But no doubt an ugly day today. We'll see if there's follow through tomorrow. But that would be my concern, Will, on shorting this. I totally agree with you. It's about as ugly as a chart can get, but it's because of that $10 level. If we were up at 20 and it looked like this, I'd say, yeah, all mean, great short. But that's the wild card is, will the institution step in and support it? At what price do they come in? How long do they wait? And I just think that's just a thing that would be in the back of my mind and keep me from actually putting a short on here. But you're right on how ugly that chart is.
No doubt about that. Next up, we have Sub-Zero, who says SDIG consolidation.
SBIG?
DIG.
Yeah.
Delta.
My ears aren't working too well today. So this one, digital mining, I don't know if this is, is this crypto mining? Is this resource mining? I'm not real familiar with this one, so I'm not sure. But this, now you have the exact opposite story here. So we're trading below 5. We can't get above 5. And now whatever the news was, I don't know if that was earnings or what, that propelled it above 5. Now you have the ability for any investment company that has aggressive growth in their investment objective. So if they say that part of their mantra, part of their investment objective is aggressive growth, they can own a stock above 5. You have to get above 10 before all the just plain growth. So it has to be aggressive growth at 5. It goes to growth at 10. But this means that by staying above 5 here, you could garner some institutional interest in this. So we could move higher here. So I would watch this one because it's a little bit overbought from the 10-day moving average. If you're thinking of going long here, I would just kind of watch it for a couple days, see if we can hold 5, let that 10-day moving average catch up. And if it does catch up and then we start to move higher, you watch the volume as well, and see if we have some above average volume. You can see whatever happened that day, there was massive volume, a huge volume spike on that move. But these little tiny bars show you that there hasn't been institutional interest in it. but that could be changing, and that's when you can get a stock that runs. But it's got to hold above 5 to attract them. So I would watch this really closely. If you're already long, well, congratulations for one thing, if you caught that move. But if you're already long, I don't see any reason to get out as long as it can stay at or around this $5 level. But if you're looking to go long, just to reiterate, I think you want to see a couple more days, make sure it holds that $5 level, let the 10-day moving average catch up, keep an eye on the volume, see if we can get a few, because it's not going to be, when the institutions come in, they don't come in all at once. You're not going to see big, massive bars. When institutions go through accumulation, you see just kind of like average volume. They kind of leg in. They don't want to draw attention to what they're doing. They don't want people to see that, oh, institutions are doing this, and then everybody buys it, and then they have to pay a higher price on something they want. So they try to kind of sneak in when they go through accumulation. So when I say look for larger bars, I'm not talking about this kind of a massive bar, just a little bit above where the average has been, and you see that on a few days on upward. That shows that that's institutional accumulation, and yeah, you could have a good one there. But let's watch this $5 level for a couple more days. Make sure it can hold there.
And
maybe one more, Zach?
Rob, sorry, go ahead.
Maybe just one more, and then you show them how to put in DIA.
Yeah, sounds like a plan. We got 3 minutes left, so let's go ahead and do that. I did just want to confirm that SDIG is a crypto miner, and they are invested in mining Bitcoin. So potentially part of that move there, but something to keep on the watch list. So we will
absolutely. Yeah, thanks for yeah. Okay.
No worries.
Yeah, you're going to want to see that upside breakout in Bitcoin continue.
That's a fact. That is a fact. We'll do Meta or ERV85, and then I will head over to the platform and I'll show everyone how to post that idea.
Yeah, this kind of gets us an other side of the AI. What the data scientists have told me at the Hub organization, and I kind of shied away from it for a while, is that if you get like in the bullish search where you have the AI on the bullish side, but you have a real low score below 25, and I think Meta was a 26 score, and it was back here a few days ago. And if you have a real low score, that's one you can fade or short and go the other way. I didn't do that. I was really tempted to on Meta. Had it been below 25, I probably would have, because of this big move up here. I felt like we needed to come back down, maybe even test 500, but at least come down from these lofty levels. And that would have been a pretty good short over the past few days. I didn't do it. So, you can't claim something that you didn't do. But it just shows the other aspect of the AI. It's not just high scores are forecast to go up and hit their targets. You can see a real low score if you want to see fades. It's not an all-on bearish, though. It's not the same thing as getting a high score on the bearish side. When you have a high score on the bearish side, that means that downward move is likely to continue. When you get a real low score on the bullish, that means that short-term weakness. So a few days is when this one would have worked, even though the score wasn't below 25. But that's something I did send out one alert from that on a score of 6, and that worked for a few day short-term move lower. And so, that gives you an opportunity to talk about that. So with Meta's score being lower, I think you have to watch this 500 level. Now, that could be it. We'll come down here to the 50-day moving average. Let's see if we can hold 500. If you're wanting to go long, I don't think you do anything now. That short move is already done. But if you want to go long, make sure it holds 500 first and holds this 50-day moving average. If it breaks below 500, then you could have a pretty decent short trade there, perhaps all the way back down to testing these lows here from July and earlier in August down around 450. So keep an eye on that 500 level. But for now, I'd sit on my hands and see what happens over the next few days. And then obviously, if it turns and goes back to the upside and we break above this wave 3 high and those highs from June, then Meta's probably off and running again. But that's what I would want to see to go long. I would want to see a break above those two levels there. the high from July and the wave 3 high. So we're kind of in between both of those right now, as you see. And so I would just watch those two levels for a directional trade one way or the other. Maybe it goes sideways in this range for a while. That's a possibility as well, that we just go range bound in Meta. So we do have our AI Outlook tomorrow night, which will be talking about this kind of thing, what the normal macro things show in an election year and what to expect. And this kind of plays into it. Anyway, Zach, go ahead and show them how to put in DIA, and then we'll call it a day.
That sounds like a great plan. And I do just want to say that while we're transitioning over to the platform, you might notice in this right-hand corner that it says you currently do not have access to this feature. So this will show you right here that we do not just give away this AI, the algorithm or the overall tool itself. Even the TradeFinder account that I'm on here doesn't have it. So only the founding memberships that have signed up so far have that access. It's very, very valuable content. And it's not something that we're just enabling across the board. So I thought some of our subscribers might get a kick out of that not even our TradeFinder account here has the AI signals. So again, it's also important just to note here that if you ever notice a difference in data for a chart or anything along those lines, first confirm that you are a founding member before reaching out to support, as if you're not a founding member or you don't have the upgraded AI data, you will have a different data stream from BZD instead of the real-time data streams that we have for the AI. So as you can see, I clicked over on this light bulb here. That brings us to our ideas. We can now see a list of all of the ideas from our growing community. I am going to go ahead and put in the founder's offer in the chat as well, just in case if anyone wants to join in the last few moments that we have available for that founder's membership. Definitely a great price to take advantage of this. We'll go over to the new idea here to create this idea so I can post it and have you all interact with it in just a few moments. The create a post here option is essentially if you are almost ready to post an idea. I like to call it a draft idea, as if the criteria for the full idea isn't fully met yet. You're still waiting for a pattern to play out, for certain parameters to be met. Then you would be able to post it as an idea, and you can just keep it as a post for reference until then. But Rob said we're going to go ahead and go with the full legitimate idea today. And the symbol on that I know was DIA. And we can put in the target price here, which I missed that one, Rob. What was our target?
424.
424. And the time frame?
Let's go ahead and go with the 3 months and let it just run all the way up into the election.
Perfect. Sounds like a good plan there. So as you can see, Rob said 3 months, which is one of these set intervals of time to choose from here. However, if you need something more specific, you can go down to the very specific day that you would like this trade to expire on. So this will be to be continued. I will go ahead and actually post this idea right now. So if you're following along with us live on the platform, you can go ahead and vote on that idea, comment, and we encourage all the interaction. We love to be able to see the live interaction again come through and then be able to communicate with you there. So it's available. We'll come back and make it pretty after the session, but I think that about covers everything we wanted to for the platform. 4 minutes after the hour, so I'll pass back over to you, Rob, to wrap things up and let everyone get back to the markets.
Great job there. Nice and concise, showing everybody how to post. And I encourage everyone to go into the area of social media aspect, if you will, because you may have an idea and you want to see what other people think of it. People are very respectful there, understand that differences of opinion are what makes markets. So don't be upset if not everybody agrees with you, because people don't always agree with me either. So it's just interesting to see what others view and how many other people may feel the same way you do. So it's a fantastic feature of the software above and beyond all the other technical stuff that we've shown you. So thanks again for taking some of your trading day with us. Hope you found it informative. I enjoyed it very much. Again, I love the community that we have here at TradeFinder, because you all are really on top of the symbols, etc. So enjoy the rest of your trading day. Look forward to talking again soon. Take care, everybody.